Right now, shares of Unusual Machines, Inc., ticker UMAC, are trading at $16.30. That is a massive move, up $3.46, or nearly 27% on the day. And let's be perfectly clear, when you see a move like this, a 27% surge in a single session, the immediate assumption for many traders, especially those using a simple Fidelity mobile app or checking their Robinhood app, is that this is a low-float, speculative stock caught in a retail-driven frenzy. The market expectation is that this is noise, a quick pump, a flash in the pan that will be gone tomorrow. This is the narrative that forms when a stock that traded around $1 and change just 1 year ago suddenly appears on the biggest gainers list. The expectation is that this is disconnected from fundamentals. But the reality of what is happening under the surface at Unusual Machines is far more significant and suggests this may not be a random move at all, but rather the market aggressively repricing the company's entire future based on one of the most significant announcements in its history. This isn't just speculative buying. This is institutional validation hitting the tape. The common belief about UMAC, for those who have followed it, is that it's a hobbyist company. It's known for its brands like Fat Shark, which makes those first-person view goggles, and Rotor Riot, an e-commerce site for drone enthusiasts. The expectation is that this is a small-cap player in the consumer drone space, a sector absolutely dominated by foreign competitors like DJI. That general narrative is what kept this stock in the single digits for so long. But that narrative is now officially obsolete. The deeper reality is that Unusual Machines has been executing a sharp, deliberate pivot away from the consumer market and directly into the lucrative, high-stakes world of the U.S. defense industrial base. Today's 27% spike isn't about hobby drones. It is the market waking up to the fact that UMAC just landed its largest contract ever, a $12.8 million order from Strategic Logics to supply components for the United States Army. This single order is a validation of their entire new strategy. Let's look at the mechanics of this move. A $12.8 million contract for a company with a market cap of around $400 million is, to put it mildly, extremely material. This isn't a pilot program. This isn't a test. This is a massive order for approximately 160,000 individual parts, motors, cameras, flight controllers, that will go directly into the Army's Rapid Reconfigurable Systems Line program. What this news does is it instantly changes the company's financial profile. Analysts scrambling to update their models are realizing that this contract provides a solid, tangible revenue backlog. This isn't a story about Tesla stock or Apple stock, where the numbers are in the hundreds of billions of dollars. This is a small-cap story, where one single contract can fundamentally alter the revenue projections for the next several quarters. This is the kind of catalyst that traders on platforms like Interactive Brokers or SoFi Invest dream of catching early. The high volume we're seeing today reflects this aggressive reevaluation. But even this contract isn't the whole story. The reality of the investment thesis here is not just this one order, but what it represents. There is a powerful geopolitical tailwind at play. The Pentagon, through the National Defense Authorization Act, or NDAA, is actively and aggressively working to remove all Chinese-made components from its drone supply chain. For years, DJI dominated. Now they are effectively banned from federal use. This has created a massive vacuum, a sudden, urgent demand for American-made, NDAA-compliant, secure drone components. This is where Unusual Machines has positioned itself. They aren't trying to build the entire drone, they are aiming to be the Intel Inside for the entire domestic drone industry. An analyst at Litchfield Research used this exact comparison, noting that UMAC might supply $300 worth of critical components for a $500 drone. As the U.S. drone production scales to meet this new demand, UMAC is positioned to be a primary beneficiary. This is the expectation versus reality mismatch. The expectation was hobby drones. The reality is critical defense supplier. This $12.8 million Army contract isn't an isolated event. It's the culmination of a series of deliberate strategic moves. Just a few weeks ago, on October 1st, the company announced an $800,000 order from another major defense drone maker, Red Cat Holdings, for cameras and motors. Before that, UMAC announced the acquisition of Rotor Lab, an Australian firm with high-performance motor technology, for $7 million. They also made a strategic investment in LightPath Technologies, which specializes in infrared optics for drone cameras, especially important as China controls much of the germanium used in military optics. And to tie it all together, the company is opening a new 17,000 square foot motor manufacturing facility in Orlando, Florida, to bring production onshore and ensure it is NDAA compliant. This isn't a company hoping to get lucky. This is a management team executing a very specific plan. They are vertically integrating and securing their supply chain to become the go-to supplier for this new American drone ecosystem. They've even had their Fat Shark video transmitter, VTX, approved for inclusion in the Pentagon's prestigious Blue UAS framework, a list of approved, secure drone components. Now, let's talk about the financial reality, because this is where the investment help and sober analysis are needed. Despite this incredible news, Unusual Machines is not currently profitable. This is not a value stock you buy for a dividend. This is a high-growth, speculative story. The company lost nearly $40 million over the past year. It is burning cash to fund these acquisitions and the build-out of its new Orlando facility. This is where the risk lies. The company is making a huge bet that these defense contracts will arrive fast enough and in large enough quantity to offset the cash burn and lead them to profitability. This is the tension in the stock. The bulls see the $12.8 million contract as just the beginning. In fact, reports have surfaced that the Army has signaled a potential target for an additional 20,000 components in 2026. If that happens, today's price of $16.30 will look cheap. The bears, however, will point to the execution risk. Can they scale the new Orlando factory without problems? Can they manage their supply chain? Will the follow-on orders materialize, or was this a one-off? This is the core conflict that will define the stock's movement for the next year. We also have to look at the trading dynamics. This stock, UMAC, has a relatively small float of about 30.8 million shares. Institutional ownership is still low, at around 12%. This means that a large portion of the shares are held by insiders and retail investors. Compounding this, the short interest on the stock was last reported at over 10%. A 10% short interest is significant. It means a lot of traders were betting against this company, likely based on that old, unprofitable hobby drone narrative. What happens when a stock with a 10% short interest drops a $12.8 million U.S. Army contract? You get what we are seeing today, a massive short squeeze. The 27% rally is not just new wires coming in, it's also short sellers racing to buy back shares to close their losing positions. This is why you see such explosive volume. This is why so many people doing self-investing through platforms like Robinhood or SoFi Invest are seeing this on their gainers list. The question for anyone looking to make an investment here is whether this move is purely a technical squeeze, or if the fundamentals now support this new higher valuation. Let's put this in perspective with other high-growth sectors. When people look for massive upside, their minds go to NVIDIA stock and the AI boom, or the early days of Tesla stock and the EV adoption. Those are stories of entire industries being born. What's happening in the domestic drone market is a story of de-risking and onshoring a critical technology. The U.S. has decided it cannot rely on foreign adversaries for its military hardware. This policy decision has created a new, protected industry overnight, and UMAC is one of the few pure-play public companies positioned to capture that demand. Its competitors, like AeroViron or Redcat, are also in this space. But UMAC's component supplier model makes it unique. It doesn't have to win the entire drone contract, it just has to be in all the winning drones. Many retail investors might be handling this kind of upside potential at a Time magazine, producing shares.